Hey traders, Raghee here, and in this recap video we're going to run through some metals. So metals were rocking for us. Now yesterday in the post-close session that I do Monday through Thursday at 4:05 Eastern, we set up copper. Now this is going to sound a lot like setups that I've explained to you guys in the previous recap videos, where if there is a level on the daily that we're quickly approaching, sure, I can put an order out here, a limit order to buy, whether that's the box low, whether that's the 20-period simple moving average, but that's an exhaustive entry that requires the market to reach a certain price, and then I get in. And my expectation is for the market to punch up higher and follow through to the upside. Well, what if we don't get there? And here's the what if trade. On the flip side, but in the same direction, is the intraday, what I call wave reversal, intraday reversal entry. And we set this up yesterday after the close in front of the Asian session at a 2.8860 wave reversal. This is where the market breaks through some kind of combination of either previous resistance, a box, the 34 EMA, excuse me, on the high, and that gets us long. So rather than waiting for the lower low to buy, we buy with the momentum of an intraday higher high. And that's exactly what we got. So this was the move we had subsequently. Now, do I anticipate that kind of move after an 8860 entry? Absolutely not. But what we're able to do with the benefit of the price movement ranges is get very realistic about what kind of move we could see once this thing really gets cooking. And that is to use the intraday and end of day price movement ranges, so we have a pretty good idea of how far this could move and where we should get tactical about taking profits off the table. So that's where we now sit on copper. Now let me give you another example, and this is where we are. And by the way, can you look for another pullback buy on copper? That's what we're looking for, continuing to play that 15-minute time frame. So the next one was gold. It's a very similar situation. There's a level that I'm waiting for to buy at. Box low, 34 EMA, and I'm looking for a 1272 low. Now we hit 1272.7, close but no cigar, right? If you had 1273, yeah, no problem, but what if you didn't? So we start looking for those wave reversals again. Now some of you also, because we had the FOMC today, I want you to think about another strategy you could deploy, which is in this zone as we approach the 1272. So once we dip below 1273, you start pricing, not puts, you start pricing calls in this area. You start pricing calls with two strikes in mind. I'll usually use, this is a very simple way to identify an out of the money strike, and that's a 50% of the current range that I'm watching. That's one really easy way to do it. Or I'll just look at a recent high, or you can look at a major or minor psychological level. But you buy the calls with that in mind once prices dip below 1273. That could help you get long on a daily time frame, especially in front of a day where you know you're going to be dealing with higher volatility because of the FOMC minutes. Alternatively, you can turn right back to different levels on intraday time frames to play the wave reversal. No different. No different. So we were looking at a wave reversal, and we were doing this throughout the day. Where could the wave reversal take us? First, we looked at 1281. That was what we looked at into, as you can see here, the post-close session. So this would have been, that conversation. The same time we were having the copper conversation, the 1281 came up. But and these are dynamic levels. So as the market continues to head lower and lower and lower, and I'm looking at a combination of ideally either a box high or low accompanying a move through the top line of the wave, we really ended up with levels that, sure, you could have taken the top line of the wave, but you could have kept a little bit on the, a little bit more patience and gone with 1281 anyways. A lot of traders just kept the 1281 stop buy to get long. A couple of you took the 1278.5, but it's the same situation. So am I saying that you're better off waiting for where a wave and previous box higher low trigger? Heck, some of you with a higher risk tolerance took even something more aggressive, like this one right there. Now, I would not advocate that. That is super aggressive, but I'm pointing it out because if your risk tolerance is higher, you take this buy and then your stop is the other side of this low at 1273, or even a little bit more ideally, 1272.7. So this low here was 1273.2. This low was 1272.7. You could easily put a 1272.3 order in there as a stop. So you really just want to make sure your stop is just on the other side of the support of the chop. Okay, now this would be too close, but ideal here or here. Okay, so that's how we played metals today. So looking at the way in which this happened, these are setups that happen again and again. So once you understand the mechanics of what I'm teaching you, you can deploy this on your own. I'll see you in the next update.